GM. Something a little different today. I'm going to talk about a concept that I realized and I figured out. There was a really simple mental addition to my trading plan that produced noticeable results. And I title it, Trade as if you're long from higher. So what it means is you will get an entry at whatever point you get an entry. But let's imagine you miss this part, you miss this part, you miss this part, and it's still in a downtrend, right? So there's a downtrend happening on Bitcoin. But you've missed the first three legs. 1, 2, 3. Well, sorry, you missed the first two legs, really. This first one wasn't really a leg, right? I was just at the top. You missed leg 1, leg 2. Typical trends tend to have 3 legs, right? So you've had leg 1, you've had leg 2, and you're like, all right, this area, this zone, this should be my area to get short, somewhere in here. But before the price action actually plays out, you're not going to know what pattern will it form. So, and what the indicators, what the data says. So I'll go back and I'll imagine it as if it's happening live. And we're looking here on a 15-minute chart. Let's actually go to a 5-minute chart, get a better look at this. All right, so you've had leg 1. You've had leg 2's coming up now. You've had leg 2, right. At this moment, you are now thinking, this is a strong downtrend. I'm a day trader. I have a 5-minute breakout system. I have a 5-minute trend following system. I want to catch a short if it presents here to go for the final leg down. I want to get my entry. I want to define my risk. I want to take my 2R and get out of the trade or wherever it goes, right? Now, because of all the stuff that's happened before in the day, and because you're getting in the moment, your brain's automatically going to think, oh, what if it's gone down too much? Or are people getting too bearish already? Maybe I shouldn't get in. Maybe it's going to reverse. Here's the way I best viewed it. This works both for entries and for adding size to your trades, but especially for entries. I want you to look at this as this is developing and say, what would I do if I was short from higher? Right? So what would I do if I was short from up here? Would I close? First thing. Would I close this short? Well, no. Right? As we play this on, I wouldn't close this. This is still a fairly bearish pattern. It's still well below the breakdown level. And let it play on a little bit more. Like, would I close it? So would I go long?
What are you doing here?
So would I close my short? No. So would I add to my short? Yes. Okay? If you're looking at it and saying, is this a valid third leg? Okay, yes. You already wanted to get short anyway. But imagine you were short from up there. This is such a simple mindset flip, because if you're in a short from higher and you're in profit, you become very calm. I'm sure you've had this experience. If you've gone long at the lows, you've gone short at the highs, and you want to add to that trade, it's super easy. Because the market's already moving in your favor, right? The market's already going where you want it to go, and you have the confidence because you're in a green trade, it's winning, and you're looking super objectively. And you think, okay, let me actually just scroll this back. If I was looking at it right here, before any price action plays out, you'd say, where would I want to get more short on? Would I want to do it there? Okay, well, where's my risk go then? My risk's way up there. But if you're like me, I used to do exactly that. I saw it break down, right? And I would wait for the first bounce because I was essentially impatient. And I would short here, right? I would short there. And I would have pretty shitty risk because I'd be like, look, this could just bounce here and then flush lower. And so I would have pretty shitty risk above that high. And, you know, I needed to move a lot to get any kind of reward. But if I was short from higher, I wouldn't have took that trade. When you're short from higher, it gives you patience. Think about this. This is so key. You can hack this. You can turn your brain and envision yourself in a winning trade, saying, where would I add? Well, what you would do is you would say, all right, I would like to see at least an equal consolidation to one of these, right? So the consolidation here is about, 20 bars. Consolidation here is about 30 bars. I'm going to put some consolidation. Let's get a consolidation, something similar, right? And it can go down from there, right? That would look roughly similar, look the same, something like that. But the main thing is here, I want it to bounce as high as possible, because then I can get a better short entry, right? Then I could short here with my same stop and get a much more favorable risk reward. See that? So that's my first intention. Now it doesn't matter if price gets there, but that's the way someone who's shorting from higher would think. I'm not going to put more in unless I get a good entry. I'm already chilling in a short, in profit. So we play it on and we see how it develops. And see that? See what you get? Instead of me, the old me who shorted here because he couldn't wait to get in, I probably would have panicked and closed by now. Even though my entry is valid, my stop loss is safe, I shorted at an inopportune time, at a bad time. Timing is everything. The guy who is short from higher, he chilled and he saw this. Look at this pattern. Up and down, an exhaustion pattern. That's not trending. That's falling back into range. So you could get that touch and short that if you wanted to, because you waited for it. Or you could wait for a couple of red candles. Absolutely, get in there. That's your highest probability entry because price is moving. That's where you would enter if you were short. Right? If you were short from up there, you'd be like, yeah, I'd add a bit here. And of course, then he can move his stop loss for the first one down. He can move it down to there. Or he could even move it down to this interim high. But either way, he gets to lock in profits to this level. He gets to jump into his next short here with his risk defined. And he's compounded his trade up. Right? But for you, who hasn't any of that, you've done the exact same thing as him. You are now in a well risk defined trade that when it plays out can get you decent returns. Right? You see all the way down, just wait till there's an actual bottom. Whatever you consider it. Bit of crappy price action. It still looks like it can go lower. So let's just say you took your profits down near the lows then. That's a 3R, right? You're not going to get all the way to the bottom, 3.98, but that's a 3R. You could have waited for there, waited for it to bounce back up, and exited there. So the difference is huge. It mightn't seem like much, but by thinking as if you're in a position from higher, it puts your brain into the mindset of a winning trader. That's powerful. It puts your brain in the mindset of a winning trader. What would a winning trader do in this position? Right? A winning trader would be looking at, I've got loads of profit, I can be patient, and I can wait for my moment to strike, and when I do, I'll take on my size, and I'll bring my stops in, and I'll lock in profits, and then I'll ride the next leg down. You can take all of those elements. You don't have to have been in the position, but you want to think like that person. That is how you think like the 10%.
What we think, we become.